Why so optimistic on the name, given what appears to be not a huge, but a slowdown nonetheless in growth in streaming?
We think it's a fantastic buy here. It's our top pick. We're very comfortable with our overweight rating here, and that price target, frankly, is just for year end this year. So it's probably, we'll see where it goes next year, but that's just even in the next sort of 9 months or so. I think you're going to have to realize that the monthly gains of subscribers are going to be lumpy. You're not going to have a straight line beat and raise every quarter. And I think you looked at this quarter, and there weren't a lot of new markets they're going into. Obviously, they have had a phenomenal success in the previous quarters, and I think you're going, you had. Slower ads this quarter. They slightly fell short of our numbers. So, definitely a little bit of a miss versus what we're expecting. But, I think they reiterated the guide. They have much better content drops, I think, longer term. They've guided to one major content drop every week, to the tune of sort of Falcon and Winter Soldier, not something small. So I think you've got a lot of reasons to be optimistic here.
You might have heard, I don't know if you're patched in to Frank Collins' report about the CDC's new guidance and masks and all this other stuff. I only bring it up because it matters a lot for Disney, right? I mean, Florida's got their own set of rules. California's got its own set of rules. They couldn't be more different. By the way, you got Disneyland, Disney World. How does sort of the world we're in right now, the rules, the masking, how does it impact, limitations on how many people can go into the parks? How do you model the theme park business, Alexia, given all that? It's got to be almost impossible because the rules are changing constantly.
But we're optimistic. Disney's always going to be conservative, right, when it comes to managing the mandates, right? They could have gone to 100% capacity at Disney World if they wanted to, according to the governor's regulation a long time ago, but they stayed conservative at around 35%. Now they're a little higher than that. I think you're going to see that capacity number raised now pretty quickly, with all the changes in the CDC guidelines, with all the improvements we're seeing on vaccinations. And I think you're going to see those losses at Disney World narrow very quickly. And I think this is what's important, what people don't realize. I mean, Disney Plus is hugely important. It's the number one priority of the company. But meanwhile, in the intermediate term between this year and next year, earnings are going to double between this year and next year because the parks are recovering so dramatically. The studios are going to see recovery too, people going back to the box office. So there can be a real inflection point here in between 21 and 22. You've got earnings doubling, and then they're up another 50% according to our projections in 2023. Another big driver for the stock here. As you start seeing it play through, I think folks will pay attention to it.
Shepard Smith here. Thanks for watching CNBC on YouTube.